What happens when you are late to Bitcoin?
There will be a tipping point. It doesn't have to be like 50% of the world figuring out Bitcoin for the rest of the world to be dragged along. It's probably something more like 1 in 20 people figuring it out. Once 1 out of 20 people have come to the same consensus versus like 1 in every 1,000 or 1 in every 100, it becomes tangibly easier for the next person to see what's happened. People who are buying Bitcoin in an ETF, like in my mind, do not understand Bitcoin. Now, there are Bitcoiners that are buying the Bitcoin Treasury companies that understand that they're putting their Bitcoin at risk to take risks to get more Bitcoin. I would say those people understand Bitcoin and they might just have a higher risk tolerance than me. But other metrics exist. Like you could look at only 3 out of 500 S&P 500 companies own Bitcoin. So that's less than 1%. No more than 1% of people understand Bitcoin today. That's how early we are.
Before we get in today's episode, I want to talk about something that comes up in almost every conversation I have with Treasury executives. They get the Bitcoin thesis, they see the macro case, but then they walk into a board meeting and the first question is, who's holding it? Are they regulated? Are they insured? Can we audit this? That's where BitGo comes in. BitGo is an OCC-regulated national trust bank. That means they operate under the same federal oversight as the institutions your board already trusts. Your assets are held in segregated trust accounts, never commingled. They're secured in 100% cold storage with multi-signature architecture. If you're building a case for Bitcoin on your balance sheet, BitGo is the custody partner that turns a board conversation from why into when. Visit bitgo.com/Bitcoin-Treasury to connect with their team. Hey everybody, Tyler here with the BitcoinTreasuries.net podcast. Today I'm joined by Parker Lewis. Parker wrote the most important collection of Bitcoin essays in the last decade, Gradually, Then Suddenly. And it's the framework that most serious Bitcoiners use to explain money to people in their lives. Today we're going to kind of zoom way out and then land the plane on questions that every treasurer, investor, and executive should be asking. Why is this happening now and why this way? So Parker, welcome to the show.
Hey, Tyler, great to be here.
So thinking about the Bitcoin Treasury audience, most viewers are kind of knee deep in MSTR and other Bitcoin Treasury companies. They're looking through spreadsheets, calculating MNAV, Bitcoin per share, and all that. But before we kind of dig into the tactical things, let's go like structural on Bitcoin for a second, okay? So you wrote Gradually, Then Suddenly. Can you tell our viewers why you wrote that and where we're kind of sitting in that arc today?
Yeah. So I started writing Gradually Then Suddenly in 2019. It started as an online essay series that I later converted and adapted into a book. But really, my journey down the Bitcoin rabbit hole started in 2016, and I had the good fortune of being introduced serendipitously to Safety and a Moose. It was Safety and the Moose wrote the book, The Bitcoin Standard, which I would say is the most widely circulated book on Bitcoin and something that anybody that is thinking about saving in Bitcoin or buying a Bitcoin treasury company stock should read, in addition to Gradually Then Suddenly. But it was before Safe had written The Bitcoin Standard, and I was doing diligence on a gold company based in Canada, and it was endeavoring to build a payments platform with gold as the backbone, fully reserved gold, and got connected with Safe. Safe really helped me unlock understanding the history of money, why gold had emerged as money. And then through that process and friendship, or during kind of that period in time, Safe had become interested in Bitcoin, started to work on an early draft of the Bitcoin Standard. And then he had shared with me a early draft pre-publication of the Bitcoin Standard, and Bitcoin had already begun to click for me, but the Bitcoin Standard, or at least the manuscript that I read, really, made everything fit into place. But from there were still logical flows or logical questions that I had to work through to really harden my understanding. It was like kind of the idea started to make sense. The pictures began to come into focus, but I needed to harden. But what about this? What about that? What about the volatility? What about the transaction speed or the throughput? How does the Bitcoin network actually work? to be able to consistently arrive back at the conclusion that Bitcoin is the solution to money printing, which is what I had concluded. And so I wrote Gradually Then Suddenly because even after the idea of Bitcoin started to click for me, there were still things that I needed to work through logically to harden my understanding to consistently arrive back at that same conclusion. And so if I had those questions, or those were the things that I had to work through, then it would be helpful to others if I could get those ideas down on paper to help accelerate people's processes to having a very hardened understanding of Bitcoin. So that was really the genesis of me beginning to write, was that there were logical thought processes that I had to work through, and I wanted to get those on paper, which in the process helped me refine my own understanding. Writing is a very beneficial process to working out ideas, and so, but it was ultimately to have the goal of accelerating people's journey to understand Bitcoin. And what I would, the goal of my work is that when, if somebody could reason through Bitcoin, that they're not taking my word for it, they're understanding the argument for themselves, understanding the foundational value proposition of Bitcoin as money, why it works, why its fixed supply is credibly enforced without the need for trust. Is that true? Like I think everyone at this early stage of Bitcoin has to have some bottom-up understanding of that so that they are not relying on someone else's word. And if you don't have that bottom-up understanding, then to a significant degree you are. And that primed with that knowledge or information, then anything that happens in the world, you can always go back to first principles rather than, well, what was that I read that somebody else said? And that's why I set out to write, to help fill in those gaps.
Really cool. And like I've told you before, your essays were really helpful to me in helping not only understand money, but also like kind of orange pilling my sphere of influence. I've got your big book up here on my screen, and chapter 1, of course, is Bitcoin obsoletes all other money. So, here as we're sitting today, Bitcoin's down 40% in price from its all-time highs. For someone who may not have taken the orange pill or isn't a Bitcoiner who sees Bitcoin as inevitable as you do, and say they're coming to you today and they're saying, Bitcoin's price is way down, it doesn't look very inevitable to me. What's your response to that person today, Parker?
Well, I would say that anybody who is thinking about investing in a Bitcoin treasury company, they need to have an understanding of that to really be making that decision with a right mind or a sound mind, or be doing it for the right reasons, other than hope, which isn't a strategy. And that if you are investing either in Bitcoin or in a Bitcoin treasury company without that knowledge, the volatility will destroy you. I think the question that you asked is a good question, which is, what are the inputs to evaluating Bitcoin that with that information and knowledge would allow you to tolerate the volatility? And for me, it's understanding the fundamental basis of Bitcoin as money first and foremost, and that there are many things to evaluate. The shelling point, or the thing of most consequential importance, is Bitcoin's fixed supply, and how that is enforced, how both the rate of issuance or control, but also the issuance of supply is distributed amongst the network, how transactions are cleared. But it comes back to, can Bitcoin credibly enforce its fixed supply or not? I come to the conclusion, and I include in the book in a later chapter some details as to how Bitcoin actually credibly enforces its fixed supply. But if you come to the conclusion that Bitcoin can enforce its fixed supply, that is really necessarily dependent on your view of having an appreciation for why it's relevant, right? Like if you stare too close at the bits, you might get lost in, well, what are we all doing here? But the problem that Bitcoin is intending to solve is to provide a form of money that can't be printed for practically anybody who wants to opt in. And because Bitcoin is global and permissionless, practically speaking, anybody who has access to the internet can opt into Bitcoin. If you understand why the problem of printing money is a problem for virtually everyone in the world, then Bitcoin starts to become a tangible solution to a problem and not being a solution in search of a problem. And then I would say that, hey, it doesn't, if it doesn't appear very inevitable to you, that it is because you're not primed with that understanding of, hey, there's a lot, it's one thing to say that Bitcoin has a credibly enforced fixed supply and it doesn't require trust. It's another thing to actually endeavor to understand, well, how could that possibly be a thing or possible? And that there's a lot underneath the surface that goes into it. It's easy to breeze past it and not actually go down what is a deep rabbit hole to figure out the mechanics of how and why it can't be undermined. But if you've done that, then you come up and say, okay, well, I've done the work to understand the significance of the fixed supply, and I have done the work to understand why its fixed supply is credible. And part of that is also tied into the fact of, like, one of the hardest things to understand about Bitcoin is this idea, well, how is it different from number 2 to 999 or 2 to the other 2,000 cryptocurrencies? And the reality is that we all only need one form of money, and that money converges to one common medium because of the nature of the problem it solves, which is trade between two people. And for two people to trade, they have to have a consensus in money, and that money converges to one common medium, for that reason. And so if you figured out, hey, Bitcoin does have a credibly enforced fixed supply, money does converge to one for very fundamental reasons due to the nature of money, then you start to look out in the world and say, well, there's no way that more than 1% of the world has figured this out. But 100% of the world suffers from the same problem, printing money, and they're all going to need this specific thing as a solution to that. And that comes back to your question. How, Bitcoin's down 40 to 50% from its prior high. Like, what allows you to continue to hold it doesn't feel very inevitable. It's like, well, if you figured out, why it's all held together by the 21 million fixed supply, and only 1% of the world understands it at best, and 100% are going to need it, that's your answer. That's what allows people to tolerate the volatility, because I figured out the reason why the next 99% of people are going to need it. And that's not a, greater fool theory. It's a causality of the problems of printing money and the need to figure out a solution. And the only solution to a broken form of money, or to a form of money that can be easily printed, is opting into one that can't. And that's Bitcoin.
Well said, Parker.
If you're trying to get to the top of BitcoinTreasuries.net, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide. Why? It offers regulated custody, OTC trading, financing, and settlement, all under one roof. They're now a publicly traded company on the New York Stock Exchange and hold a federally chartered national bank license from the OCC. For Treasury companies, it's a must call. This is the infrastructure layer that really matters. Learn more at bitgo.com. It's the best kept secret known by every true Bitcoin OG. CoinKite has been building the gold standard in private key security for years, and they just raised the bar again. The Cold Card Q is an absolute powerhouse for serious Bitcoin treasuries. We're talking a full QWERTY keyboard, air gap protections, and it's built for maximum security. The brand new Cold Card MK5, it has a massive Gorilla Glass screen and new NFC functionality for an even more seamless experience. So if your business is large or small, there's a cold card for you. Head to store.coinkite.com and use the code 6BT at checkout for 6% off. Stop cutting corners on your Bitcoin treasury. You wished for it. Bitcoin is finally on sale. And if you're sitting on BTC and want liquidity without dumping your stack, Arch Lending can make it easy. You can get USD or USDC in minutes, and your collateral stays in qualified custody. They never rehypothecate your assets. As your assets move up and down in value, you can scale your credit line instantly or pull collateral back when the market runs. If you need help, you get real humans 24/7, not bots. This is Arch Lending. Simple tiers, public pricing. You can check them out at archlending.com.
I've seen over I would say the last year or two, as I've been covering Bitcoin treasuries more and more, several public Bitcoin treasury companies, there seem to be some different camps forming among Bitcoiners on X, through on podcasts that I watch and articles that I read, and I think it's more nuanced than just two camps of people who are maybe pro Bitcoin, more pure play Bitcoin treasury companies that are trading, that are kind of executing in capital markets. But I think your chapter about Bitcoin being the great definancialization certainly focuses on the problems with the central bank and inflation. But a lot of Bitcoiners are saying that Bitcoin treasury companies that are focused in the way that Strategy is executing, Michael Saylor's company, and maybe some of the other ones that have amassed several coins, are just doing financial engineering. What's your take on the lay of the land on how that whole Bitcoin treasury phenomenon has played out so far? I think there's a lot of companies out there differentiating and doing some different things, and there's going to be a lot of copycats. And I've heard you talk about that there's going to be a lot of consolidation in the marketplace, and I don't think that's unfounded in any way. I think we do see some of that get gobbled up. But we're, so I zoomed back 5 years ago, and when Michael Saylor was first starting to buy Bitcoin, I thought it was going to be, now Tesla added some Bitcoin to its balance sheet. I thought, a couple other Mag 7 companies are right around the corner, and people are just going to gradually adopt Bitcoin more and more. But we've seen kind of this pivot to Bitcoiners, or maybe some opportunists, adding Bitcoin to their balance sheet and just trying to financially engineer their way to accumulating more Bitcoin. Is this a problem that you see, and why do you think there's different camps among Bitcoiners that are forming, where people are either super hot or super cold on Bitcoin treasury companies?
What I would say is, one, I don't lose too many sleep in it. I personally don't invest in Bitcoin treasury companies because staying humble, stacking sats, and got sats in cold storage. I think what's important to distinguish is Bitcoin, and particularly Bitcoin in cold storage, is savings, and buying treasury companies are investments. And I think what Bitcoin treasury companies are doing is inevitable. That's why I don't lose sleep over it. It's a function of fiat arbitrage, right? And Pierre Rochard wrote a famous article back in 2014. It's on the Nakamoto Institute. Anybody can go read it. They should read it. Titled Speculative Attack, where if you can access cheap dollars, then you can borrow those dollars and buy a harder asset, Bitcoin, and financially engineer an outcome that is better financially. Not everyone can do it. It comes with risk. It comes with not just counterparty risk, but execution risk. And my view of it is, because the underlying commodity converges to one, money, that the product that Bitcoin treasury companies are selling is who can financially engineer the best. But the underlying commodity is the same. And so if someone was interested in investing in a Bitcoin treasury company, they would only do it and it would only make economic sense, is for every Bitcoin equivalent they put into it, that they would get more out of it. And the in-between there is risk, that there is a risk that the other happens, that you actually get less Bitcoin out, and that if the market of investors that are interested in taking on that incremental risk, because there is an opportunity, because the bottomless pit of fiat is endless, and that you can arbitrage fiat to get more Bitcoin. The market as a whole cannot do that by definition. You can't make more Bitcoin, but somebody can financial engineer their way to it, that then the market for all of those investors, as they're that would be interested in taking this incremental risk on to potentially financially engineer a way to get more Bitcoin, are going to be evaluated against all the other companies that are doing that. And if one is doing that marginally better than the other, then it would make sense to invest in the one that's doing it the best. That's most well suited. So I'm not saying there's only going to be one that's only strategy, but that the ones that are doing this as a pure play, there are going to be few, and that it will consolidate. But that's part of the market process of like, well, this is a service being offered to a class of investors, and who can do it best. And part of who can do it best is dictated on there being competition for the market to then figure out who's doing it best. And to this point, Michael Saylor and Strategy are doing it the best. Now, what I would say is on that concept of Bitcoin being the great definancialization is that nothing I would say is inconsistent with, my views of how Bitcoin will definancialize the economic structure over time and what is happening with Bitcoin treasury companies, because by and large, every time that someone is buying a Bitcoin treasury company, it is largely coming from them selling some other financialized security. And it's taking from a more complicated financial structure with more risk to one that is ultimately holding Bitcoin, the form of money that can't be printed, with other instruments being layered in to take on leverage. I personally want to invest my time. It's like, I understand that there might be multiple camps in the Bitcoin world. I'm of the mind to work on creating products that Bitcoiners can use, like, payments or custody. That's what I want to spend my time on, but I don't fault people who, want to optimize, and fiat arbitrage. It's like, I don't want to do that with my time personally, but it's inevitable. And so, if we accept that it's inevitable, somebody's going to do it because the fiat is there to be borrowed, right?
Yeah. The incentives kind of all point to that, right? When the arbitrage is there, people want to make money, and I think if you're a Bitcoiner and you have access to capital markets, it's kind of pretty hard for someone like Michael Saylor to resist that urge.
Yeah, I mean, but some people have interest in one thing versus another, and everyone follows their interests. But then what I would also say is like what's functionally happening, because let's say MicroStrategy has this instrument of a preferred stock that is called STRC. And what people are making the decision is like, hey, do I sell X, Y, or Z stock? Someone might be saying, do I want to convert some Bitcoin into that? But by and large, what is happening, and this is consistent with the definancialization process, is Michael Saylor's offering an 11% return to say, hey, do you want to convert your high yield bonds, your investment grade bonds that are paying 5% or 6% and taking single company risk? Or do you want to effectively have over collateralized Bitcoin and I'll pay you a current return of 11%? And so financial assets get sold and consolidated into Bitcoin. And more people, as they figure out Bitcoin, right? Because it's not just STRC. It's like, hey, when someone figures out Bitcoin, they buy a little bit of Bitcoin to start, and they buy a little bit of Bitcoin with cash that's sitting in their savings account. And then the Bitcoin price crashes, and then they're like, okay, I figured out why it's a good store of value. I'm going to sell some stock that I have in my portfolio to buy more Bitcoin. That process is the definancialization. It's converting financialized assets into money. And in some cases, those flows are going directly into Bitcoin. In some flows, they're going into a security that's buying Bitcoin. But the thing that is causing people to rotate out of stocks and bonds broadly will be, because they can have a more simple solution, which is saving in a form of money that can't be printed. And then if somebody's putting a wrapper around it, like an ETF or a treasury company, it's like all of that is inevitable, but it's also consistent with the financial flow of securities, stocks, bonds transferring, because the risk premium is not attractive enough to hold. And all they really need is a better form of money. And then over time, as it becomes clear exactly what Bitcoin is to the masses, which it is not today, no more than 1% of people understand it, there will not be a reason for an ETF or a Bitcoin treasury company. Like when fiat is gone, there's not going to be this concept of a fiat arbitrage. And those companies either will dividend the Bitcoin, or distribute it, right? If you own the ETF, someone, currently authorized purchasers are allowed to withdraw Bitcoin in kind, but you know, one way or the other, at a future point in time when fiat's no longer being traded, that Bitcoin is going to find its way to the beneficial owners. And similar with the treasury companies, that at the end of the day, when Bitcoin has been the clear winner of money, and in my mind, fiat goes away, then the shareholders of those companies, if they were effective in their strategy, if the risk they took to get more Bitcoin actually panned out and it didn't result in them losing Bitcoin, then the Bitcoin gets distributed to the shareholders via dividends, or capital return. So, but all of that I think is consistent with this broader trend of Bitcoin helping to definancialize, because all those people that were forced into stocks and bonds because of money being printed and their need to, quote, make their money grow because they need to outpace inflation, goes away when you have a form of money that can't be printed.
If you're building or managing a Bitcoin treasury, you need institutional infrastructure to match. BitGo is the digital asset backbone trusted by thousands of institutions worldwide, offering regulated custody, OTC trading, financing, and settlement all under one roof. They're now a publicly traded company on the NYSE and hold a federally chartered national bank license from the OCC. For Bitcoin treasury companies, this is the infrastructure layer that matters. Learn more at bitgo.com. CoinKite has been building the gold standard in Bitcoin private key security for years, and they just raised the bar again. The brand new Coldcard MK5 brings a massive Gorilla Glass screen and new NFC functionality for a more seamless experience. The Coldcard Q is an absolute powerhouse for serious Bitcoiners, with a full QWERTY keyboard, air-gapped, and built for maximum security. Whatever your setup, executive, Bitcoiner, Bitcoin Treasury, there's a cold card for you. Head to store.coinkite.com and use code 6BT at checkout for 6% off.
The dip is here, and with it, you might be thinking, is it time for me to borrow against my Bitcoin? Enter Arch Lending. They're building the most transparent borrowing experience in crypto. We're talking industry-leading rates from 8.49% when you borrow against BTC, and you receive USD within minutes. Your assets stay protected with qualified custody. There's no rehypothecation, and verifiable segregated addresses are used always. As your collateral grows, you can unlock more liquidity, adjust your line anytime, and extend your term with a single click. And with 24/7 white glove support, you're never going to feel like you're on your own. Arch Lending, simple terms, public pricing, market-leading rates at every size. You can learn more at archlending.com.
Yeah, and I see these Bitcoin treasury companies, I see these forays into Bitcoin exchange traded products by your BlackRocks, by Morgan Stanley, who as we're recording, they launched an ETF product today. Not only is inevitable, but they're kind of it's not the orange pill that I took, but they're going to be an orange pill for some people, because some people's first exposure is going to Bitcoin is going to be through one of these equities, through one of these preferred digital credit products, through an ETF. And anyone who's buying Bitcoin and is investing in Bitcoin directly or indirectly, I think, once you see how it changes your portfolio and you do a little bit of a deep dive on what you're investing in, you can't help but, go to Saifedean's book, read Gradually Then Suddenly.
Yeah, I mean, I think in most cases, like, people have to have some exposure to Bitcoin to then have this, and like, they had to have some reason to want to take that leap in the first place. But then once they need to either have Bitcoin or have some exposure to Bitcoin, whether it's, through an ETF or, I would still recommend, like, buy a little Bitcoin on, River or Strike, Unchained, get some to cold storage. But I agree. It's like if you buy the ETF, it gives you now have a financial incentive to pay attention to what's happening with Bitcoin. You're going to do that more. And when I worked at Unchained, we used to, or not, we used to, when I was there, still to this day, I don't speak for them anymore, but we issued Bitcoin back loans. And whenever we would talk to somebody who was financing those loans, it was a really attractive return. In that sense, it's like the STRC product from a financial exposure perspective. Different structure, but some rate of return, dollar denominated, with a covered Bitcoin position, a over collateralized Bitcoin position as the protection security. If an investor did that for long enough, then they'd figure out, well, maybe I should just own Bitcoin rather than making a 11% return or 14% return. But they're glad to have made that return because it was better than whatever else they were going to invest in that had a similar profile in terms of the quality of the collateral, the quality of the credit. And that's part of a natural process. So there's nothing wrong with that.
Do you think the issuers or the asset managers like BlackRock, like your Morgan Stanleys, to me, I'll say I think they're a little bit opportunists, obviously kind of chasing a trend with Bitcoin, but there are people at those institutions who certainly understand Bitcoin. Do you view these companies as tourists, or are they, as they're offering these products, as they're profitable products for their institution, do you think they're just going to keep building out Bitcoin type products, or how are they contributing, I guess, to the hyper Bitcoinization experiment?
I'd say that they're creating pipes for people to buy and have exposure to Bitcoin via rails that they're familiar with. And the future is highly uncertain. So, if we look at certain Bitcoin miners that are public Bitcoin miners that are now pivoting entirely away from Bitcoin, scrubbing their websites of Bitcoin, and in many ways, in my view, chasing their tails, the same thing can happen to these ETF companies. I don't personally know Larry Fink. I've seen things that he said even recently that tell me he doesn't fully understand Bitcoin, but I also have seen him say things that indicate that he understands Bitcoin a lot better today from a fundamental perspective and its basis of value than 5 years ago. And that the decision to launch these vehicles is informed by that change in understanding. How that evolves is unclear, right? So I do think in order for these products to survive long term, somebody at BlackRock or somebody at Morgan Stanley has to actually get Bitcoin. They have to see this end state of the world adopting Bitcoin. They don't necessarily have to share the same final outcome as I have, although my view is like, show me where my logic is wrong, because I'll tell you the incentives dictate to people just using Bitcoin as everyday money and don't need to be wrapped in these financial vehicles at the end of the day, even while it can be valuable that if you're a client of Morgan Stanley and Morgan Stanley has an ETF and you've trusted Morgan Stanley for 40 years, that it's easier for you to just buy the Bitcoin in the ETF. And then eventually Morgan Stanley will say, you know what? The incentives are dictating that I allow people to buy Bitcoin outside of an ETF too. And I'll do that. Now, if they never come to really understand Bitcoin, maybe they don't, right? And they could reverse a position. The incentives just dictate that someone figures it out and more people do, and more people continue to have Bitcoin products, and more people continue to be forced to align their products in the incentives of their customers, right? Like BlackRock did not, it would be, I think, abjectly incorrect to say that BlackRock just did a Bitcoin ETF because they saw profit. They saw their customers leaving and doing other things, seeing their customers going to Coinbase and selling some S&P 500, ETF that they were selling, and they got wise to it, and they said, well, if we don't want our customers to continue to live. Morgan Stanley Guaranty did the same thing. Their customers kept asking for it, and if they didn't deliver it to them, then their customers were going to continue to leave. The financial flows were going to continue to leave. What does someone do in that world? They deliver a product that solves the problem of their customers so they can continue to service them. So it doesn't prevent somebody with limited understanding, like following some signal and then pivoting because they didn't have the true signal. I expect that to happen too. Who it happens from, no one really knows. We only know that it will happen, that some people will exit, some people will build the wrong products. And the analog I would point to is the Bitcoin miners who are no longer Bitcoin miners. This is like they in my mind, they didn't understand Bitcoin. And I fault none of them for chasing AI, but there would be a world where you'd say, well, hey, why don't I sell this asset, let somebody else build an AI data center here, and I'm going to go out to the edge and continue to mine Bitcoin and find cheap energy, right? There's two paths there, but the people that are literally wringing their hands of Bitcoin probably never understood it. Someone like Marathon's a good example. They were mining Bitcoin at a loss. That was an irrational behavior that was enabled by some fiat arbitrage, and now they're pivoting into being an AI data center company. It's like someone who might seem to understand Bitcoin that doesn't have the true signal will eventually be exposed, but those who do will benefit, and they'll continue to deliver products to the market that align incentives to allow them to keep their customers or their shareholder bases. And that's what I'd expect of these companies building, ETFs or Treasury companies too.
Yeah, it makes a lot of sense. Can we talk a little bit about like the game theory as it pertains to nation states and how long, really the fiat project can last? Everybody who's watching this is well aware that the spending on the sovereign level has gotten out of control. The deficits, the money printing are, just astronomical numbers. Coming out of the great financial crisis, we used to think, $700 billion was a lot of money, but like the government spends that in months nowadays, the U.S. government. How long do you think, Parker, that this, fiat experiment can last until, I think you and I agree definitely on the inevitability of Bitcoin. How that happens is certainly cloudy, but do we have a long runway yet for fiat? Would it surprise you if in 10 years we're saying much of the same things? And how, I guess a two-parter on that. Once a large nation state does adopt Bitcoin, what is the game theory on other nation states, falling in line and transacting with Bitcoin? Because, there's obviously key advantages if the United States were to be one of the first adopters of Bitcoin, or if China were to be one of the first adopters. There's huge advantages to being first. How would that play out, do you think, geopolitically? And again, talk about fiat's runway.
So on Fiat's runway, I do think that this is something like a decade, like that there's about a decade of runway. I'll caveat that because on one hand, it sounds crazy. On the other hand, like my logic to it, and I'll say on either side of this logic, because you brought up something earlier about how after MicroStrategy bought Bitcoin, then Square bought Bitcoin, then Tesla bought Bitcoin, and it would have been logical for more companies to operating businesses to buy Bitcoin. And since Tesla bought Bitcoin, there hasn't been another Fortune 500 or not Fortune 500, S&P 500 business that's bought Bitcoin. So on the one hand, it's hard to reconcile how, with the spread of information and the rate of debt creation and inevitable money printing that's going to be necessary, can live in a way that doesn't drive Bitcoin adoption to a point where it becomes the largest currency system in the world in the next decade. And I look at that saying, like, can Bitcoin adoption or will Bitcoin adoption logically increase by 20 times over the next 10 years based on the amount of money that is inevitably going to have to print by every major central bank in the world, as well as knowledge distributing as a function of time? More people reading the Bitcoin standard, more people observing how inflation is not going away while rates are higher, and that maybe it's not, high rates bring inflation down, that maybe the world's a lot more complex than that, and delivering food to the grocery store and gas to the gas station is a lot more complex. and it's actually the printing of money that makes that trading process and supply chains more difficult to fulfill, not easier. But if you follow out 2 more full halving cycles for Bitcoin, the rate of issuing getting cut in half, setting aside really like the impact of the supply shock, it's more so Bitcoin continuing to work, and in those periods of halving, Bitcoin enforces its fixed supply every 10 minutes. The evidence of Bitcoin enforcing its fixed supply is each next block. But for the person that is not as well read on Bitcoin, the Bitcoin network cutting the rate in half and seeing that work from the outside in is a reinforcing signal that Bitcoin is working at a moment in time, and that its fixed supply is continuing to be enforced. So if that's happening in parallel to massive amounts of debt being created and ultimately massive amounts of money being created to support those debts, that how we go from a world where we're at today to 10 years from now with adoption not increasing by 20 times, which would get Bitcoin to being roughly the largest currency system in the world, that my view of it is once it's second to the US dollar, it will be so much easier to see the outcome. Like, the dollar is one thing, but the euro or the yen as the secondary global currencies, that when Bitcoin's the clear second, I think that's when it becomes a more rapid monetization. And it's difficult to see that following just like the what adoption would need to occur and following the incentive to not expect the adoption to increase 20 times. And that historically we've seen about 5 to 10 time moves per halving cycle. Then I would say, and other things though, because it's not just the money printing that makes people understand Bitcoin. It is because when it comes to the not sovereign nation states, it is Russia getting cut off from SWIFT, right? Today there was news that it is purported from the Financial Times. I don't know how reliable the Financial Times is, but talking about how Iran is going to require payment in Bitcoin per ship that's passing through the Strait of Hormuz. And some people might look at that and hate Bitcoin and say, "Oh, they're using Bitcoin," but the real question is, it's why? Why would any country, why would any company, why would any individual endeavor to say you can pay me in Bitcoin, or you must pay me in Bitcoin, and that the delivery of Bitcoin itself is the end point of that. The input is a determination that this thing Bitcoin is viable to accept as a currency, that it must be able to store value over a period of time to make that economical. And because every other currency that exists in the world, and gold is not a currency, gold is money, every currency in the world other than Bitcoin is not neutral. That the settlement of the currency in the digital world is dependent on one nation state agreeing or liking the other nation state. And there are things that certain nations can do to bully others into using their currency system, but none of that changes the fact that every country is now seeing the dilemma of using some other country's currency. And Bitcoin's the only neutral one. And so what happens if a country gets cut off from SWIFT or has their foreign assets seized? Well, here's this thing, Bitcoin. I could convert it, my resources to Bitcoin directly. I could take natural gas and convert it directly to Bitcoin via mining. I could talk to one of my trading partners and say, hey, if you want my natural gas, you got to start paying me in Bitcoin. Because what is my alternative? Any other currency that is non-neutral, that could be canceled, right? And so I think that as these incidences happen, like Russia getting cut off from SWIFT, Iran saying pay me in Bitcoin. Um, the key thing here is non-neutrality, and that the neutrality of Bitcoin, that I can pay you Bitcoin and that I don't have to depend on you for settlement. That that becomes the obvious global settlement rail.
Yeah. Are you surprised that like BRICS hasn't come to that conclusion yet?
No, because and this is something that Safe Dean helped me understand, is that like as much as someone like, as logical as it might be for Iran to accept Bitcoin, or Russia to accept Bitcoin, not making a statement at all about the geopolitics of, or internal politics of either of those countries, like right or wrong, it's just like there's something very logical about it. It works. Anybody can opt into it. The poorest person in Nicaragua could opt into Bitcoin just the same as a nation state can, and that's a wild thing to think about. But that they've done that, and maybe they were doing that before, who knows, right? But they've done that when their backs were up against the wall, when they had no other option to. Um, and so I think it's a circumstance where a country, say like China, might recognize that they need Bitcoin, but they might not want to send that international signal because they might not want their people to use Bitcoin. Because if their people use Bitcoin, they lose control. They lose capital controls. They lose what control they get from the financial system. And so I think that there is a rational view of the world where these countries figure out that they need Bitcoin while not necessarily wanting to send the signal to the world that, their internal currencies are no good, because they aren't.
Yeah, it's got the wheels spinning, that kind of like the capitalist markets like the United States need Bitcoin. I would suppose less than maybe these countries like Russia that have been shut out of SWIFT, or Iran that have had sanctions against them.
I mean, what I would say to that is, like, I think from a geopolitical perspective, yes. From like a nation state level, yes. Internally, like, people in America need Bitcoin,
Hmm.
like probably more so
Hmm.
than people in Russia or China, because our country, our economy is more leveraged, more the supply chains are more complex, the wealth is greater, which means the more wealth you have, the more wealth that's at risk of loss. When your currency fails, the more pain that you feel, um, than a less developed country. If you don't have something else, some other working currency to quickly reboot on. Like when you think about it, so like, cause like, I just want to make sure that like, there's not this dichotomy of like, hey, these rogue nations or perceived rogue nations in the West, or, stand to benefit more than the US, because in the US, the real problem that Bitcoin solves is money, right? Bitcoin happens to be a unique form of money that can also operate as a currency system. And is capable of facilitating trade and direct commerce. Well, that means getting food to the grocery stores. It means getting gas to the gas station. This Iran Hormuz thing is just massively upstream from that. It's like, you want to get gas to the gas station and you want it to be affordable such that you can reliably get it there. Well, you need oil flowing. And Iran just said, I need Bitcoin. And at some point, there's going to be some guy in West Texas or some company that's drilling that's going to say, like, I need Bitcoin too, but because the dollar's becoming too volatile for me to continue my operations to get the oil out of the ground, if I don't have a form of money that somebody in New York can print by clicking a button on a computer screen. It's all the same problem. It's just, it's different pain points that are causing certain people to move before others, or having a incentive to figure out the problem and then identify the solution.
Yeah, it's going to be really interesting to see how it plays out. And as you mentioned, like, the next couple of halving cycles, you expect those to bring a lot of adoption. And I think I really share that. I think people are kind of underselling this, how important how important halving still can be. So if we do see a lot of adoption coming into Bitcoin over the next 5 to 10 years, call it, what do you say to the person who, is saying either today or maybe over the next several months, in the next several years, I'm late to Bitcoin. It's passed me by, and my response to them right now is like, hey, we're still early. But what about when it does become kind of later stage for fiat? How I- I don't know. Is it going to be led in some respects by common just citizens, ordinary citizens adopting Bitcoin? What happens when you are late to Bitcoin, Parker?
Well, one thing I would say is my general framework of there will be a tipping point that we're not. Doesn't have to be like 50% of the world figuring out Bitcoin for the rest of the world to be dragged along. It's probably something more like 1 in 20 people figuring it out. Because once 1 in 20, let's say 1 in 20 or 1 in 10 or 1 in 30, once 1 out of 20 people have come to the same consensus, like if you're walking down the street and on a city block, 1 out of every 20 people there versus like 1 in every 1,000 or 1 in every 100, it becomes tangibly easier for the next person to see what's happening. Because so many people in the world, that would, if it was like, to quantify it, it's like if there's 8 billion people in the world, and 10% had figured out Bitcoin, that's 800 million people. Like if 800 million people have figured out Bitcoin and there's another, 7.2 billion to figure it out, like a lot of people. So then it's like, if 400 million people had figured it out, which would be 5%, that's a lot of absolute people coming to that conclusion. And then what I would say is that just look around, like by any metric, try to assess what percentage of people actually understand Bitcoin today, like actually understand it. People will quote statistics about how X number of Americans own crypto. That is not an estimate of how many people actually understand Bitcoin. An estimate of people who understand Bitcoin would be people that only own Bitcoin and don't own any of the other nonsense. People who are buying Bitcoin in an ETF, like in my mind, do not understand Bitcoin. Now, there are Bitcoiners that are buying the Bitcoin Treasury companies that understand that they're putting their Bitcoin at risk to take risks to get more Bitcoin. And I would say those people understand Bitcoin and they might just have a higher risk tolerance than me. But other metrics exist. Like you could look at only 3 out of 500 S&P 500 companies own Bitcoin. So that's less than 1%. That there would need to be clear, basically saying no more than 1% of people understand Bitcoin today. That's how early we are. If you figure out why 100% of the world's going to need it, then there's a lot of markers out there in the world to make it very clear that we're not even at the 1% metric. You could look at Bitcoin as a fraction of the global financial system, less than 1%. The S&P 500 analogy, just look out in the world, go to your friend group. What number of people, of all the people that I know, are, hold this crazy position that Bitcoin is going to replace all of their money? Like, not 1%. And if it's not 1%, and you figured out the importance of the fixed supply, you figured out why it's credible, you figured out why money logically and naturally converges to one common medium, and that Bitcoin's global and permissionless, 100% of people are going to need it, and you're early. And that all we're looking at is a dollar price of Bitcoin, and there's an endless supply of dollars. The amount of debt that was created in the amount of dollar debt that was created in the last quarter is 1.2 trillion. The budget deficit for this year for the U.S. government is going to be something like 2 trillion. These numbers are so large that you can't actually even quantify like what $1 trillion is. I don't even think a billionaire could quantify what $1 trillion is. Like, if somebody was worth $1 billion, the idea that somebody would have a worth that's 1,000 times more than their lavish lifestyle, it's the number is too large to conceive. So it's getting over that unit bias, really, and understanding it's like if you had one Bitcoin, then only 21 million people in the world maximum could be in that position. That's a better way to start to have the frame of how early or not that you are, because somebody could convert to a retirement portfolio with $70,000 in it and have one Bitcoin and be one of 21 million. And there's a lot more than 21 million people in the world. There's more than 21 millionaires in the world today. The question is like, hey, is this incentive structure going to hold? Is it credible? Do I understand it? Because if I don't understand it and I buy some of it and then the price of Bitcoin crashes by 40 or 50%, which it has done many times over, then you can be in a position of selling it at the absolute worst time to do that. But if you're primed with the knowledge, then you can hold through those periods and you can start to see the field that you really are early, and that there's no way that we're at 1% adoption.
So thinking, Parker, about Strategy, who holds 767,000 Bitcoin or so now, do you think they have, Michael Saylor's increased the Bitcoin adoption timeline based on how much Bitcoin he's been able to accumulate?
I don't know. I don't know that to be true. I think that he's delivering a service to his shareholders. But I think that volatility is good for Bitcoin, and that I think there's a scenario where it's like, hey, anytime there's a seller of Bitcoin, there's got to be a buyer, right? There's a scenario where if Bitcoin crashed harder, that certain individuals wouldn't have sold and might have bought more. That human psychology is can be vicious, right? So it's like he has had a positive impact on on a number of individuals in their understanding of Bitcoin. And so it's like, in my world, it's a positive, right? But like, I think when you start to get into price and like acceleration, it's like there's only one scenario, and there's the scenario is the one where Strategy has acquired 700,000 Bitcoin. But I think it would be wrong to look at it and say that there wasn't another scenario where it could have accelerated faster, with either the price of Bitcoin going up slower or going down more aggressively. So I think that, and it's not really worth, debating that, because like the same is true of any individual that decided to buy a lot of Bitcoin and then later potentially decided to sell a lot of Bitcoin, right? Which there are evidences of that. So, I think, Michael's like where Michael Saylor has accelerated Bitcoin is helping other people understand Bitcoin.
Yeah, for sure. And do you think his product, STRC, Stretch, that's his preferred equity that pays the monthly dividends, of course, that's kind of like a savings vehicle, especially for non-Bitcoiners, I would say. I think in the coming years we're going to see a lot of institutions, maybe it's large pools of capital that otherwise can't get Bitcoin exposure or needs fixed income exposure. I think Stretch is going to be that wrapper that hoovers in a lot of that capital and helps more people understand Bitcoin in that way. Do you see it the same way?
Yeah, I think what I would say is, for people to understand Bitcoin, it's a valuable product. I can also realize why its existence makes it harder for others to understand Bitcoin. Because if you understand Bitcoin, so if you understand why Bitcoin has fundamental value, if you understand why, because like there's an entity, MicroStrategy, and it is holding Bitcoin. And people that understand Bitcoin understand what holding Bitcoin means at like a technical level, that there's a key somewhere, and MicroStrategy is custodying with a combination of Coinbase and Fidelity, to my understanding, but Coinbase and Fidelity are using multi-sig, and I don't know if they're segregated, but like you have some conception that, hey, there's this asset underlying it, and I understand how to validate the currency. I understand why the like how the rules of the network get enforced and why they can't be undermined. And MicroStrategy is holding a lot of this really valuable asset. And then what is he doing? He's creating this instrument that's basically over collateralized by 10 times. And he's basically saying, hey, I'll pay you out a 10% return. You get no more upside other than that, or whatever it is, 11.5% with STRC. And if the price of Bitcoin goes down, though, you have first claim. So you're in a covered position. Now, if Bitcoin goes to zero, you lose your money too. But if Bitcoin goes down by, 80%, like, you still have par. And there's people that, if you understand Bitcoin, that would be attracted by that because they might not want 100% of their exposure being in this highly volatile asset. But on the other side, if you don't understand Bitcoin, I understand how someone would look at that and say, like, holy shit, this looks like a Ponzi scheme. It's like you're giving money, you're putting money in, and then they're buying Bitcoin, and they must be selling a portion of that Bitcoin to pay you a return. And it's like, that's valid too. But again, if you don't have the basis of, like, well, it's a time-based speculation, right? It's like Michael Saylor has figured out why Bitcoin is the scarcest form of money that exists in the world. He's borrowing from somebody at a rate of 11.5% to buy a Bitcoin, and he's doing it in a way that is not on a fixed duration. It's not a maturity scheduled piece of debt, but it is a senior claim. And he's basically saying, I will pay you out a rate of interest, and if anything goes wrong, you get the senior claim on all the Bitcoin that we have. But he also knows why the market's going to have to buy Bitcoin outside of those vehicles. Why people are going to buy the BlackRock ETF, the Morgan Stanley ETF, Bitcoin to cold storage. It's the same, no more than 1% of people have figured it out, and 100% of people are going to need it. And in his case, he's delivering a service to the people who own STRC, and he's doing a service to his shareholders that want to take on the risk to potentially get more Bitcoin through that leverage, while inherently accepting more risk as a function of it. And that risk is time. He's making the bet and trying to financially engineer to have the most flexibility of time. But the person that doesn't understand any of the basis of holding Bitcoin would very much look at that structure and say, like, I'm out. Like, this is left hand paying right hand. Whereas, like, if a company took out debt to do a stock repurchase, they say, oh, well, the company is undervalued. They're buying back shares with the idea that more people are going to value their shares higher in the future, and that's a profitable thing to do. Very similar to that.
Yeah. So at the top, Parker, you said that how you're trying to contribute to Bitcoin right now is building out the infrastructure, building out services, and that's kind of how you're putting your energies into Bitcoin. So you've got Zaprite. Can you fill us in on what you've been up to? I know there's a lot of people probably who are watching this who have private Bitcoin treasury companies who are looking to basically find ways to add Bitcoin on their own personal and their own company's balance sheet. Can you tell us how you're using Zaprite to kind of build out solutions for Bitcoiners?
Yeah. So, yes, some of the history behind it. First I worked on Bitcoin custody at Unchained, and my view of it was that if Bitcoin's money, the most important first service next to money is custody, because it's one thing to say that you have an understanding of how Bitcoin can credibly enforce its fixed supply, but if you were holding Bitcoin and you lost it because it got hacked or stolen, or some counterparty that you were trusting failed, and you no longer had your Bitcoin, the Bitcoin could have stored value, but it didn't store value for you. So custody is the most foundational problem to solve. I'd stepped back from my role at Unchained in late 2022. I was turning graduates and suddenly into a book. I started to think about how I was going to be paid for the book, where I was going to sell it, wanted to be paid in Bitcoin, also wanted to take Bitcoin payments on my blog. And during that same period, Silicon Valley Bank failed, and there was a slew of regional bank failures that happened in the United States. And that just reinforced for me, or resurfaced the fact that the financial system was a lot more fragile than everyone thought. It's like I knew all those underlying issues existed. Them bubbling to the surface as fast as they did, when they did, and to the degree that they did, heightened, in my mind, the need to continue to work on Bitcoin. And when I looked out in the world, the least developed part of the Bitcoin ecosystem was payments. And payments is downstream of someone first figuring out why Bitcoin stores value. But at that point, I decided that I wanted to work on Bitcoin payments. Zaprite was an early business that had been started in the prior year or two. I knew the founder. Me and a friend of mine approached John McGill, who's the founder and CEO of Zaprite, with our ideas of Bitcoin payments, and they were very similar to John. And so rather than endeavoring to start our own company, we just joined forces. And so now at Zaprite, we're working on Bitcoin payments. What we build we basically bring fiat and Bitcoin into one interface so that businesses can accept both Bitcoin and fiat, meeting businesses where they are, Bitcoin, fiat, and stablecoins. But with the mind that the thing that is most core to what we do is Bitcoin. People use us for Bitcoin. But we have tools like invoices. We have an API for people who have custom websites that want to have seamless checkouts where, their customers, well, whatever their preferences might be, they can meet them. If a customer wants to pay with a credit card, they can pay with a credit card. With ACH, they can pay ACH. If they want to pay Bitcoin, if they want to pay Lightning, all of that built in a Bitcoin native way. That's built to be Bitcoin first. That's solving the problems of Bitcoiners. We are non-custodial, so we are not like a traditional payments processor. Funds do not come directly to us. We allow our customers to connect their methods of payment to Zaprite, and then when their customers pay them, they go directly to them. Whether that's a cold card, whether that's an Unchained vault, whether that's a Strike account, we're meeting our customers where they are at. We're bringing their traditional fiat rails into our system. Again, we're not processing their fiat. We're allowing them to connect things like Stripe, Square, PayPal, Authorize.net, but doing all that under one umbrella so that they can manage all their payments in one place, but have the tools that they need to make Bitcoin payments easy and to facilitate those payments in a way that takes a company that would formerly be a financial intermediary out of that financial intermediation. So being able to deliver payments with no chargebacks, getting Bitcoin directly to them. And we really focus on people that understand Bitcoin because they're the ones that are most logical to be the first adopters of Bitcoin payments. And that guides how we build products to build it non-custodially, to be able to support hardware wallets or multi-sig or non-custodial Lightning if people want to. And we just build out from that center point of these are the markets. We focus on a lot of Bitcoin-centric businesses, but we also do that strategically because the customers of Bitcoin-centric businesses are the logical early movers for themselves that run businesses to accept Bitcoin. So, at the end of the day, my view of Bitcoin is everyone's going to use Bitcoin as a store of value. As more people use Bitcoin as a store of value, more people are going to figure out that they should just accept it as a form of payment. And in the future, we're going to be living on a Bitcoin standard where Bitcoin is the currency. We're not paying in stable coins. Everything is priced in Bitcoin, settled in Bitcoin. And it's like, yes, Bitcoin is a store of value. But once you figure that out, the logical thing to do if you're running a business, and it's more logical for small businesses because there's fewer decision makers. If you own and run the business, you can say, pay me in Bitcoin, and you can invest in that infrastructure. If you have a large company that has a 10-person board and only 1 in 100 people understand Bitcoin at maximum, it's hard to get 5 to 10 people on a public company board, around that. So we're building products for small to medium-sized businesses that are tightly held, and delivering the products that we think match supply and demand of where there's users that or customers that have Bitcoin willing to pay in Bitcoin and merchants that understand Bitcoin and want to be paid in Bitcoin, but also recognize that they still need to receive fiat. And we, wrap all that under one umbrella to make it very easy.
Awesome. Incredible stuff, Parker. Thanks so much for building that. We're excited to see how you grow and deliver those solutions for Bitcoiners and Bitcoin companies out there. One thing I have all my guests say before they leave is stay orange.
Stay orange.
Ladies and gentlemen, the man who's making gradually then suddenly a household phrase for a new digital age, Parker Lewis.
Thanks, Tyler.